What happened yesterday afternoon and last night? They tried these
Our
markets
new
higher.
fearless leader came out and through a third party, I think it was Bloomberg, said that their team is now looking at putting incremental tariffs in place over a period of time. Again, a market that was thin, we're up near the high end of the daily range, and they rallied Euro 30 points, they rallied Aussie 40 points, Kiwi 50 points, but they're having a really hard time holding on to, they put it in, and then right at 8 o'clock last night when Japan came in, China came in, started selling treasuries again, equities came off, and if this is the best they can do is they rally it on very thin conditions in the afternoon. Sometimes these are great rallies because it catches everybody off guard, and then they put another leg up to it, and then that challenges everybody who's short. Right now, it's not getting challenged, and I'm a little disappointed. We've got CPI today, which we'll definitely get a reflexive move off of, but things like Aussie and Kiwi didn't hold on to the bulk of that rally. We've given back a little bit more than we're almost right back to those. And again, these are 40 pips off of new lows. So I don't know what to make of it. I would have thought if we actually had a chance to put a more sustained bottom in, we'd trade a little bit better than we are right now.
This is really looking like, and you can look really across the board, it's pretty similar. I'm flipping just between, this is euro dollar, and so a more major developed currency pair here versus commodity currency Aussie, and you can see pretty similar moves. And then you widen out that lens, and it's going to, like we talked about a little bit yesterday, the commodity currencies have not seen as much downside as these majors in the last couple of trading days. No one is performing well. But Pete, this is looking a lot like anyone who's traded equities and the equity indexes, when they get in this mode of higher, a 1% sell-off that's immediately bought, and then higher. And this is obviously a little bit of the opposite. I mean, I guess you could say the US dollar is looking like that equity index mode where it's just like US dollar moves higher for 2 or 3 trading days in a row to new highs or new lows for an Australian dollar, or the euro dollar getting down below 102 yesterday and the end of last week. And you're like, oh, it's a new high. Surely they'll back this US dollar off, or it's a new low in euro dollar. Surely they'll bounce this market finally. You see the bounce, and then they sell into it again, and then have no problem trading down to 101.50, 101 even. Now, I mean, we're at 102.50 here in euro dollar, so we're not down below those levels. But I can't help but agree with you. All of these sell-offs from a dollar standpoint, or rallies from a name any currency standpoint, are super weak. And when you just zoom out and think about this whole move from the start of October until now, I mean, look at how many times these markets have bounced back against the dollar, and we've maybe thought, oh, okay, maybe right here it was 105, or they broke 104, and this was the bounce back.
This looks exactly like what this is starting to
we're right back there again. So I don't know how you could feel necessarily confident.
So what am I looking for? I'm not looking for that news story about some third party saying that the Trump tariffs may be less. We all know they're going to be less. It's irrelevant. What I'm looking for is something to kick tape action to show me that there's some two-way risk in play, and that's what you're going to build the legs of a turnaround on. I'm not seeing it here yet, so it's challenging.
But you are getting the back and forth for, like, I mean, if you bought anything, especially below 102.20 or 102.40, they at least let you out.
And I think you hit on a great point. If you're looking for the trade to 105, I think, sure, you can do that, but we're not seeing the tape action to say that we formed a bottom for that trade. But if you're willing to say that the market's cheap and I'm going to take a day's worth of movement, which is or a little bit day. I'd say 60 pips is probably a day plus. What I mean by that is the one standard deviation daily range is probably around 47 pips. So you got 60 pips in an afternoon and going into early evening. If you're willing to take that, you could have bought anywhere along that 102 during the day when we were back and forth on either side of 102, and you got that, and you were able to harvest it. If you're looking to, this is the turn, you're not getting that kind of tape action yet, I think. So if you're absolutely right, and if you are truly a dollar bull and you think they're going to chew through par and continue to go, and I'm not saying they're not. I have no. We don't know.
Yeah.
You got a 100 pip rally to sell.
Yeah.
And that's good. So,
and I wanted to,
and the guys who are riding the horse of, I'm going to ride this till it breaks. In other words, any of these rallies in currencies or sell-offs in dollars are opportunities to buy. Going back to our crypto example, how falls in currency. I mean, we saw crypto. You and I talked about it, and we saw the 91,000 print yesterday. And I was like, "What do you think?" He says, "I don't know."
Every time you feel like, oh, this is the, but
this
that's why I bring up
that's
why I bring up the equity index piece.
Bitcoin's back to 97,000 this morning.
Well, and the nice thing about forex is, and this doesn't have to be the way it is moving forward, but you tend to get more back and forth than you do in, say, an equity index. But I bring up the equity index piece because it is, yes, similar to the crypto move the last couple of trading days, where it's like they take the market down for maybe 2 days in a row, and you're like, wow, they're 3% off of the highs, 5% off the highs, whatever it is, and you're like, this feels like they might finally take this market down, and then it could bounce back and keep chugging along. We've seen equity indexes. When I started at Tasty Trade back in 2016, 17 or whatever, the stock market chugged along for, it felt like 2 or 3 years, just new high, sell off of 1%, new high. Now, I mean,
But there's an interesting market that is, it's, again, using futures trade equity indexes is great. It's a neutral security. You can be long or short, same cost. But it's a market with a natural upward bias to it. It's got upward drift. What's great about currencies is there's no upward drift, because if you argue there's upward drift in the dollar, you're saying there's downward drift in the euro. That's not the case. So it is a true neutral security that doesn't have a bias one way or another. Yes, all these factors influence direction of movement, but it does give you more back and forth, which is great.
Because you have so many, obviously, in equities and as far as, the gold market, the art world, there's so many price insensitive buyers every single day that it's hard to really take that market down. Here you don't have so much of that. I do want to point this out because this was an interesting one to me yesterday. If you're not trading Swiss franc, take a look at least, because this is a hell of a range for the last, I mean, to start this week, to end last week, and to start this week. This market got all the way up to 92 yesterday morning. They took it all the way back down early this morning, right as the European session started, to 91.30. Not a high vol market in here, this Swiss franc, but really interesting to see this starting to pick up, because it is right there at those lows for Swiss franc, high for US dollar. And of course, you can say, okay, euro dollar's already through those lows for the last year or so of trading. The commodity currencies already through those lows. The Swiss franc, and this is one that you probably in your broad history of trading have traded a lot of. Tell us a little bit of how this is distinct from the euro dollars or the Aussie and these other pieces, because it is different and it's trading a little bit different the last couple of days. You can see they got up to this 92 cents mark, Pete, and really seeing some whippy movement around it.
Yeah, and it is an inflection point. Swiss was classically safe haven. So U.S. equities got hit, global equities got hit. Whatever euro did and Aussie did or yen did, I don't want to say yen and dollar Canada were usually sold. The thinking was you wanted to own yen because they were going to repatriate assets, and yen was a flight to quality play, being short dollar yen or long yen, being short dollar Swiss or long Swiss was a play. We didn't see them necessarily. They haven't bitten on that because this currency is reacting to a different set of influences right now. That safe haven aspect of Swiss is not necessarily playing out right now because, I mean, we're seeing stress in the UK, we're seeing stress in France, in Germany. You would think that those crosses would be interesting too, where Swiss would be outperforming, and we're not seeing that so much here.
Yeah, it was really interesting.
Let's take a look at Euro Swiss.
Yeah, that dollar Swiss market, really interesting. This Euro Swiss, of course, you could say, oh, it's near the lower end of its range. But if I read you all the news of the last couple of weeks here and all of the fear that is in the Euro area and now developing also in the UK, and then I asked you where this market would be, you would probably say through the lows.
Right. And absolutely. And I think what this chart is telling us is that Euro has underperformed Swiss. And that's why we're seeing the Euro Swiss lower. So Swiss is actually, while they both, Euro and Swiss are lower against the dollar, the Euro has fallen more against the dollar than the Swiss has. So that's what this is telling us, a little bit of that play. But
not by a lot.
Not by a lot. You would think that this should be appreciably lower than it is.
Like let's do a little history here because we're not through the lows that we saw back at the end of 2023, and I wonder if I widen out in time. We are actually near historic lows that it could whip through. If we do get escalating fear in here, but I wonder. This point,
you're absolutely right. So as strong as dollar Swiss seems, or the dollar seems against the Swiss franc, relative to the other currency pairs, it's holding in pretty well.
Yeah.
And actually, when you look, you look back to 2012 when they would peg dollar Swiss at 120 against the euro, and when that peg broke down, we saw it trade all the way sub 80 cents. Now, a quick recap, we got back to the peg level, and we've been selling off ever since, but we're getting down to lows now that are going to create an interesting trade.
Just interesting to me because, as I looked through, obviously the daily chart here, it's not much to see. It's, dollar strength like you've seen. But as I looked through the just 15-minute chart of the last couple of days, you're seeing some really whippy moves in this Swiss franc. And
where now dollar yen has stopped rallying, it's not really coming off, and it's not giving you a ton to trade right now. It's
you had the non-farm move here, but since then, it's trying to rally on the flight to quality thing, but it not really moving one way or the other.
But 20, 30 pips, that's tough to scalp around that range. Go back to the dollar Swiss. You're getting more. When I say tradable range, as traders, we want enough movement so we don't have to be perfect at picking a low or picking a high. Here, you're getting good movement back and forth.
Yeah.
So this is one that I've started to take a look at and be a little bit more involved in because I think Swiss is getting a little bit more elastic. What's the reason? Frankly, I don't care.
Yeah.
And when I say that, sure, I want to understand what's driving it markets, but I want the elasticity because that gives me a more tradable range to either layer in trades or trade both sides of this. So honestly, when you look at where I'd rather be right now, yes, dollar yen has stopped rallying. Does that mean I want to be short? Not quite yet. But I do think that dollar Swiss, in terms of tape action, is giving you more back.
And you've got just in the last couple of days here, this is a 100 pip high to low range on a market that is 30%, 40% smaller than that dollar yen market that we were just looking at.
This has always been traditionally slipperier. What I mean by that, it tends to give you a lot of price points to trade, which is great as an active trader. Let's jump over the calendar really quick because we do have CPI. So we've got one economic event today at 7:30.
We've got the PPI today and then I believe CPI tomorrow.
Am I wrong? Do they have that back?
That's it. I mean, that's what the
Is that what it says?
Inflation.
I always thought CPI came first. Okay.
But yeah,
so we got PPI today.
PPI today.
Okay, so PPI a little less watch the CPI, but we'll definitely get some movement off of that with the idea we saw a strong non-farms number. Are we going to see an uptick in inflation? If we do, we're going to see bonds have a little bit of a hard time here, and that is going to probably spill over to a little bit of dollar strength. So we got a binary event. I don't care what the number is. Put your game plan together. If the number is soft, we'll see the dollar sell off a little bit. If you want to be a dollar bull, it's going to give you an opportunity to get in. If we get a strong print, we're going to see new lows in euro probably. It'll be interesting to see the tape action. If we do see those new euro lows and buyers come in again, that tells you something versus just them rolling over to new low lows.
Yeah. Well, it gets to the point of, and you and I talk about this a lot, is how many times or how far do you price in dollar strength or good U.S. data until you finally get that reflexive move. It might be this CPI, it might be the FOMC in a couple of weeks, it might be next month's non-farm, but at some point.
And you make a great point. It's good U.S. data at 102 for the euro, not 108.
Exactly.
So just keep that context and then look for the opportunity. So check it out. So by the way, you look great in the black. We'll see you back here tomorrow. Have a great day.